What's up guys, welcome back to the channel. In today's video we'll be talking about entry, that is how to successfully enter our trades when price return back to our supply or our demand area. This is the fourth video of the mentorship program, and if you are just joining us for the first time, please consider watching other videos that are related to this program, and if you haven't subscribed to the channel yet, please consider subscribing to the channel. Back to the topic of today, entries. How do we enter our trades when price return back to our supply or our demand zone? So we basically have two types of entry on our list today, and the first entry is what we call the risk entry. The risk entry is basically trading without any confirmation. Trading without what? Any confirmation. So how do we apply the risk entry? The risk entry is basically when you identify price giving you your lower low, this is your lower high, and you identified your break of structure. So when you identify your break of structure, what do you basically do? You go map out your supply zone. So once you map out your supply zone, you place your sell order waiting for price to return, tap into your order, trigger you into the trade, then price moves to your direction, and if it doesn't move to your direction, it might take you out of the trade. So this is how we use the risk entry. Same thing goes to your demand zone. You see price giving you a higher high, pulls back, give you your higher low, breaks structure, you identify your demand zone. So when you identify your demand zone, what do? You place your buy order at the zone waiting for price to come back, trigger you into the trade, moves to your predicted direction, or it takes you out of the trade. So this is pure risk entry, and this kind of entry you might lose a lot of trades because not all supply and demand zones hold. Even if it's a valid zone, sometimes you can see them fail. No strategy is 100% sure. You all know that. This risk entry, I don't advise people to build their trading strategy around risk entry, because risk entry fails. Except you don't have time to be on your screen, you can reduce your risk or reduce your lot size, then use the risk entry. But if you have enough screen time, I will advise you to go for the confirmation entry. So how do we use the confirmation entry? As you can see, price has given you your lower low, here is your lower high, and price broke structure with a candle that has momentum. You have identified your breaks of structure, and you've now mapped out your supply zone. So when you map out your supply zone, what do? You wait for price to return back to your zone, and once price returns back to your zone, you go down to your lower time frame to look for the confirmations that will make you enter the trade. Price returns back to our zone. Now we have moved down to our lower time frame for the confirmation. You move down. For me, I move down, let's say I move down to my 15 minutes time frame to look for the confirmations that will make me take the trade. If I don't see these confirmations, I just leave price to move, because most times you might see price come back, tap into your zone, it doesn't give you confirmation, it just moves to your predicted direction. And if I see things like that, I don't worry myself, I just let the trade go, another one will come. So what do I usually do? I go down to my 15 minutes time frame to look for confirmations. And what are the confirmations I look for? Let's say price tap into my supply zone. What do I do? Once price starts into my supply zone, like you all know, price will still be giving you your lower time frame higher highs and higher low, higher high and higher low. And as you know, once price is still giving you higher high and higher low, that explains that we are still in an uptrend. So what are you gonna wait for that will be the confirmation you will see that will make you enter the trade? So as you can see, price gives another high, higher high, and what do we see here? We see a change of character. And I've said several things about change of character, and change of character will play an important role in this topic today. So what do we see? Price was making higher highs and higher lows, breaking structures. And when you see things like this, you understand that price is still in an uptrend because it's breaking structures. And when price breaks structure, you have to understand that break of structure happens in direction of the trend, and change of character happens against the trend. So when you get a change of character, that tells you that the trend is about to end. So what do we see? Price was breaking structures, moving in direction of the trend, and over here we got a change of character, price coming down to break the higher low. And when price broke the higher low, what do? We move down and look for our supply zone. And when we identify our supply zone, what do? We place our sell order waiting for price to come back, tap into the zone, and then move to our predicted direction. This is the confirmation we need to enter the trade when we move down to our lower time frame. So the same thing goes here. Price is moving down, forming our lower lows and lower highs, and here we get the change of character. When we get the change of character, what do we look for? We look for our demand zone, waiting for price to come back, tap into our demand zone, and then move to our direction. This is how we use the lower time frame for confirmation to enter our trades when price return back to our supply or our demand zone. So we'll be moving to a price chart right now for a clearer and a better example. Okay, this is USDJPY price chart, a 2 hours time frame. I'll be using it to explain how to enter our trades when price return back to our demand zone. This was actually a 4 hours point of interest, but I refined it down to the 2 hours time frame. So let's get down into the example. So what can we see? We got our demand zone right here, and right now we are waiting for price to return back, tap into our zone, and then we move down to our lower time frame to look for our confirmations. I know many people will be confused right now. They'll be asking questions like, which time frame do I actually need for my confirmations? So I will advise you, if you're a scalper, you can move down to your 1 minute time frame, your 3 minutes time frame, or your 5 minutes time frame for your entry confirmations. And if you are a day trader, you hold your trades for 1 full day or for a few hours, you can use the 15 minutes time frame. The 5 minutes time frame is still okay. You can use it for your entry confirmations. And if you are a position trader, you hold your trades for months, for weeks, okay, you can go down to your 1 hour time frame. Your 1 hour time frame is okay, and you can equally go down to your 30 minutes time frame. I hope this is clear. But if you're not satisfied with the time frame I listed here, you can actually try this out on your own. Know the best time frame that works for you. I use the 15 minutes time frame because I've tried it out several times and it works for me, so I prefer using the 15 minutes time frame. So you can actually try your own out, know what works for you, because that's the best way you make the most out of your trade. So let's get down to the example right now. So I'll be playing price forward, and once price get down to our zone, I'll show you how those that use their risk entry enter the trade, and we can actually go down to our lower time frame to see how we enter our trade with confirmation. So let's get down now. Let's press price forward and see what happens. You can see price came very close to our zone, but we didn't get any tap into our zone. Continue moving. You can see no movement into the zone, and right now price has just tapped into our zone. As price has tapped into our zone, what can we see? Those that are using risk entry are already in the trade, and their stop loss has been placed few pips below the zone, and here is the target. This high right here is their target. Those using risk entry, they are in the trade right now, and you can see their risk reward. They have the risk reward of about 1:4 risk reward ratio. So right now we're going down to the lower time frame for our confirmation entry, and like I said, I use the 15 minutes time frame. You can see it right here. This is the 15 minutes time frame. We're going down for our confirmation entry. So what can we clearly see here? You can see price is still in a downtrend. You can see price make this low moves here. You can see price is still in a downtrend, and now we want to get a change of character for us to be able to enter our trade. A change of character that we confirm that price is about to change direction. So what can we see? Price needs to break this lower high to give us confirmation that price is about to change direction. This lower high needs to be broken before we can now look for our demand zone and we can join the trade. So let's press price forward and see if we can get a break. You can see price came very close, but we didn't get any break, and you can see its price didn't break a lower high. You can see we are getting a pullback right now, and you can see we have breaking the lower high, and now we broke the lower high. What can you see? Price was in the downtrend, and now we have broken this previous lower high, and this is what we call the change of character. So now that you have identified your change of character, what will you do? You can now map out your demand zone. When you map out your demand zone, what will you do? You place your order and wait for price to return, tag you into the trade, and now you've gotten the confirmation you need. You can now look for your target. So let's press price forward and see what happens. You can see we are getting the pullback we need, and now price has tapped into our zone, and now that price has tapped into our zone, we are in a trade, and we'll be looking forward to hit our target right now. So let's see what happens. See, now we are in profit and price has started moving forward, and this is exactly what I was trying to explain. This is what I was trying to explain. So what can we see right here? Now listen attentively to understand how this really works. You see, price has been in a downtrend. This explains it very clearly. Price was in a downtrend, and over here we get the change of character. When we got this change of character, you see price push back, taps into our zone, tagging us into the trade, and you can see price has started moving higher. You see, change of character, we have changed direction. The price has changed direction. You can see price is now making higher highs and higher lows, which tells you that you have changed direction. And what will be our expectation? Our expectation is that price will continue making higher highs and higher lows and continue moving to our direction. Have you seen the importance of change of character and how powerful change of character can be? So let's press price forward and see how we really ended this trade. And mind you, all these zones you see here will be very reactive, and you can see price is actually moving to our target after it has tapped into our zone. So now here is our target. Well, for me, the way I trade, here will be my targets. So here will be my target. Although I have an expectation that price will break here, but for the way I trade, to be more safe, you can see price has hit our take profits. Price hits our targets with ease, and note this is the 15 minutes time frame. We got the confirmation we needed right here, and we got involved in the trade, and we have hit our target. So we're going down back to the 2 hours time frame and see the risk to reward ratio of the person using a risk entry and we that used a confirmation entry. So we are back to the 2 hours time frame. Sorry about this, let me fix this right now. As you can see, we got the confirmation and price smashed our take profit. Remember, the person using a risk entry entered the trade before us, and let's say the person used the same targets with us. Let's check the risk reward ratio. The person using the risk entry, like I mentioned before, got about 1:4 risk reward ratio, and we that used the confirmation entry, we got about 1:11 risk reward ratio. And you can see how important going down to your lower time frame to look for your confirmation entries can be, and how profitable it is. You can see it right here. This is to tell you, even if you lose 5 times using this confirmation entry and you win 1 trade, that is to say you've covered your losses and you are still in profit. So I'll be showing you the second example using a supply zone, so you will know how to use the confirmation entry. So let's get down to the second example. Okay, this is the second example I will use to explain how we can actually trade off our supply and demand zone using the risk and the confirmation entry. This particular example right here was shared on my Telegram channel, and if you have interest in joining my Telegram channel where I share free setups every new week, you can check the description box below. You can find a link right there. Let's get down to the example. As you can see, this is a valid supply zone. You can see it, we got liquidity resting before our zone, and we have liquidity that we can target. Once price taps into our zone, we can target this liquidity below. We have mapped out our supply zone right here, and right now we are waiting for price to return back to our zone. Price is returning back to our zone with a very large momentum, and trying to use risk entry right here is just like trying to catch a falling knife, which might injure you. So approaching this trade with a risk entry won't be a very good idea, but everyone has their own style of trading. So those using risk entry will still enter their trade, and we that use confirmation entry will still wait for price to give us the confirmation. If we get the confirmation, good. If we don't get the confirmation, it's okay, we wait for another setup. So let's press price forward and see how we can actually get involved in this trade. As you can see, price has tapped into our zone, and those using risk entry are now in the trade because they already placed their order waiting for price to return, and now they can target the liquidity resting below the zone. And as you can see, they have the risk reward of about 1:6. And now we'll be going down to our lower time frame to look for the confirmations we need to enter this trade. Remember, I'll be using the 15 minutes time frame for this example, so it's left for you to know the time frame that is best for you. And now this is our 15 minutes time frame, and as you can clearly see here, price is still making higher highs and higher lows. You can clearly see it. We are still in an uptrend in our lower time frame. You can see price making the higher highs and the higher lows. And what is the expectation? We are waiting for price to give us a change of character. Once price gives us a change of character, we identify our supply zone. Once we identify our supply zone, we just wait for price to tap into our zone and now move to our direction. So I will keep pressing price forward to see if we can actually get the confirmation we need to enter this trade. As you can see right here, price has broken this low. We get a break of this low, and when we got this break, what will it do? We look for our supply zone. We actually have two supply zones right here. We have this supply zone right here, but for me, I will have more interest on this recent supply zone we have right here, and right now I will place my order right here, waiting for price to come back, tap me into the trade, and now I can now target where to take my profits. So let's keep pressing price forward. As you can see, price has moved away and now we are in a trade. Price has tapped into our zone. You can see it very neatly. Price tapped into our zone. Now we can actually look for our targets. So liquidity is resting right here, and here is a good target. I'll be targeting the liquidity resting here, expecting price to come back and take the liquidity resting right here. So since I've placed my targets right now, I will start playing price forward to see how we can actually make the most out of this. You can see price is now moving lower. We still get a pullback. You can see getting a pullback. You can see it's a price is now moving to our direction. Our TP has been smashed. So we go back to the 2 hours time frame and see. Okay, you can see it clearly. Price smashed our take profits, and we'll be combining our results with those that use risk entry and see who made better money out of this trade. Like I said, those using risk entry got about 1:6 risk reward ratio, and we that use the confirmation entry made about 1:30 risk reward ratio. As you can see, using the confirmation entry is actually the best in terms of approaching your trade, because it will help you avoid entering trades on zones that won't hold, because most times you might see price coming back with this kind of large momentum and you see it blast through your zone. So if you are using risk entry, price will take you out of your trade, and if you were actually waiting for your confirmation entry, you will avoid entering that kind of trade. This is how we enter our trades, and I expect you right now to move to your price chart, try this out, backtest it, see if it actually works. Most times people say strategy doesn't work when they don't actually backtest to see if it actually does. So right now, move to your price chart and try this out. Thanks for watching this video. Remember, this is still me, Solomon Wisdom, aka Born to Trade, and I will still be uploading videos, so subscribe and click the notification bell to be notified each time I upload new videos on this channel, because I will keep uploading educational content. So I want to say thanks for being part of this program.